we agree largely with most of the other fund managers out there that this is your classic dead cat bounce. Of course, we don't know that for sure. We don't have a crystal ball. But if you look at the speed of this rally, if you look at the valuations from which the March 23rd trough occurred, and where we are right now, and given just the general state of the wider economy and earnings are still going down, it would be extremely unusual for us to have reached a true bottom on the 23rd of March.
And yet, as we look at this market, Fahad, there are days when we get strong runs to the upside. And when we got that Moderna news that seemed to suggest there was a breakthrough on a vaccine, we had one of those strong days, which shows there is a lot of potential for the market to grind higher from here. Is there a vaccine playbook that our audience can follow?
Well, clearly, I think if you've seen the last 2 days of trading, you've seen how dangerous it is to follow any kind of vaccine playbook. You had Moderna that came out with what appears to be a vastly overly optimistic and simplified statement. So we don't know. Look, of course, if you read what most of the experts seem to think, they still think that we are very far away from any real sort of vaccine coming into general distribution in the population, 18 months, etc. The few people who seem to be more optimistic than that appear to have political agendas. So I would err on the side of science and say that, look, we're still quite a ways away from that. And in general, even if a vaccine was to be developed by the end of this year, we're already seeing such dramatic scarring in the economy that it's not going to be just as simple as flipping a switch and coming right back to where we were at the beginning of this year. There is going to be residual damage that's going to take a lot longer to work out.
Also, we have seen, though, days where some companies have done better and there have been clear standouts because perhaps from a corporate positioning perspective, they have more resilience on the balance sheet, or maybe they just have a better business model in this current lockdown environment. You've got to drill down into the sectors to find those businesses. But there is a lot of corporate Darwinism taking place here, as you've pointed out in your notes. How do you decide which ones you stay with and which ones you sell on the bounces?
It's a great question, and there's no easy way to do it. So it's obviously one, and you've alluded to it. It's a very Darwinian landscape, and you've got to really look at each company case by case, look at their balance sheet, look at their market position, and look at their resiliency. It's not as simple as painting a broad brush of, well, these are tech companies, so they should do fine because they appear to be quite resilient, and here are some airlines and they won't do as well. It's not quite as simple as that. There are obviously going to be some tech companies that are not going to do particularly well. You think just recently, it was even before the pandemic, but companies like Uber and WeWork, really darlings of a previous tech era, that have really fared quite poorly. And on the other hand, there are going to be some airlines and others, those which have cash, those which can manage to survive now, which will be looking to consolidate their market positions, gain market share, and really come out of this entire crisis much stronger. If you think about the well-capitalized Qatar type players in the world, ideally they could probably be quite stronger in a few years.